Wow, Facebook stock dropped over 20% in just one day. That equates to over $100 billion off their market cap. And Mark Zuckerberg? Well, I'm not really sure how to tell you guys this, but the poor guy lost over $16 billion. He'll make it all back eventually. But what exactly happened to Facebook stock? Well, let's find out. What's up everybody, my name is Ale, welcome to My World of Finance. If you want to see more frequent videos and daily updates on some of your favorite stocks, then make sure that you support the channel by smashing that like button, just like you're playing Smash Brothers on the N64, which in my opinion was the best Smash Brothers game of all time. But with that being said, let's go ahead and get started and let's take a look at what exactly happened to Facebook stock. Okay, so technically the stock dropped during after hours trading, and it has to do with them reporting earnings today, July 25th, that's the time of this recording, and I think that there's really three things that went wrong. So one of the things was that they reported slower user growth, the second was missing revenue expectations, and the third has to do with that pesky weak guidance that seems to always hurt some of our favorite, most popular stocks. Now we'll get into all that in just a second, but believe it or not, despite Facebook losing about a fifth of its value today, they did actually report some positives, and one of those has to do with their strong profitability. In fact, they reported net income at $5.12 billion, which is up from $3.89 billion in the year ago quarter. That equates to their EPS being reported at $1.74 per share. That's up from $1.32 year over year, and analysts were expecting $1.71 per share, so they were able to beat analyst expectations there as well. But when looking at user growth, MAUs and DAUs, otherwise known as monthly and daily active users, both categories fell short of analyst expectations by around 20 million each. That led analysts to speculate that those data privacy scandals did in fact have some sort of impact on user growth. And while the needle remained mostly flat in the US and Canada, we did in fact see a user decline in Europe versus the previous quarter, and so that equated to monthly users dropping by around 1 million, daily users dropping by around 3 million. And while they did miss estimates by around 20 million, and that is certainly a very large number, I think you should also know that they were still able to hit around 2.23 billion monthly users and around 1.47 billion daily users, both categories up around 11% year over year. But that is actually a significant drop when talking about their user growth rate, which was actually much higher at about 17% in the previous year. Now it's much lower at about 11%, and so while it is still double-digit growth, the actual rate is actually much lower. Now when looking at revenue, sales were up 40% year over year, which is very good, but it still didn't meet analyst expectations, which were as high as $13.36 billion, and they reported $13.23 billion, clearly missing the target. And CFO David Wenner added that total revenue growth rates will decelerate through the second half of 2018, which cannot be a good sign. He also added that revenue growth rates will likely decline by high single-digit percentages. They also mentioned that they expect expenses to grow by around 50% from the previous year, and Mark Zuckerberg has said that they are continuously hiring more people by the thousands to help with data security and safety because of all the controversies that they faced in the past. And so the total count of personnel there has increased by around 47% year over year. And so this increase in spending and investing in security will likely affect Facebook's profitability, at least in the short term. But Mark Zuckerberg has mentioned that they are running the company long term and not just focusing on the next quarter. All right, now let's start moving into our conclusion. Now, while this may seem like a huge deal to some, I do feel like we have seen this many times before. A stock will climb too high too fast, and then when you get any kind of negative news, no matter how small it may be, it does actually end up affecting the stock, sometimes hammering it pretty badly. You got to keep in mind that this stock was up over 20% in just 2018 alone, while the S&P 500 was up less than 7%, and now it's crashed more than 20%, so I think you're probably seeing some short-term traders likely cashing in their profits who don't want to lose those short-term gains. Having said that, I have more of a long-term mindset, and while I don't currently own any Facebook stock at the moment, if I did, I would just consider this a very nice discount and an opportunity to lower my cost basis and keep investing long-term. Now, again, I mentioned that I don't currently own any Facebook stock, but this massive drop is very tempting, and I may actually end up opening a position soon. Now, I've said it before and I'll say it again, I'm not very bullish on Facebook.com, but I am absolutely gushing over Instagram. You're talking about over 1 billion users and at engagement rates that continue to improve all the time. And so I think that online advertising is really the future, and Facebook is in a prime position to really benefit from that. And in a world where smartphones are so heavily used, probably the most used consumer electronic out there by a wide margin, I think that it's great that over 90% of Facebook's revenue actually comes from mobile advertising. So I think that Facebook is in a great position, maybe more so than anyone, short of maybe Google, to really dominate the online and mobile advertising market and keep that cash flowing in long term. And I think it's also important to note that Facebook did report ARPU, average revenue per user, at $5.97, beating analyst estimates, which were at $5.94. So to sum it all up, and again, this is just in my opinion, I do feel like this is a bit of an overreaction. I mean, you're talking about a stock dropping over 20%, about a fifth of its value in just one day. And this is a company that has such an impressive income statement, such a strong balance sheet, and such a strong presence in mobile and online advertising. I think that this stock has to be a buy at these prices. I think it's kind of a no-brainer. And so I really see Facebook as a long-term play. Now, short-term, there is some weak guidance. They are having these issues with data privacy controversies, regulations coming from the European Union and things like that. So definitely some things that they need to deal with short term, but I do feel like they are making the right investments. They are beefing up security for data privacy and things like that. I think long term they will be fine. And at these prices, you're basically getting Facebook stock at pre-2018 prices, basically negating all of the run up that it's had in 2018. I think that's a pretty good deal in my opinion. But who cares what I think? It matters what you guys think. So make sure you leave a comment down below. Let me know how you feel about Facebook stock, especially at these prices. Are you invested in Facebook? And if so, are you thinking about picking up some more on this dip and lowering your cost basis? Or if you're not invested in Facebook, are you thinking about opening up a position now that the stock is a bit cheaper? I'd love to hear all about it. So make sure you leave a comment. And with that, I hope that you all have a wonderful, beautiful day and that you take care.